Hello everyone, today we'll discuss what's coming is worse than a recession, in which Michael Burry predicted that the market would crash even more than it did in 2008. Over the past few years, Michael Burry has been one of the most talked about investors. According to one of the few investors who predicted the financial crisis, the current market chaos could be the harbinger of a much worse tragedy. The hedge fund manager Michael Burry, renowned for having forecast the housing market's collapse in 2008, is announcing the impending arrival of an even worse financial disaster. In an interview with Business Insider, Burry predicted that the next recession would be worse than 2008 and affect an entire generation. When it rains, it pours, according to an old proverb. It means that when one good or bad thing happens, another good or bad thing also happens. The economy has declined since the start of 2022, particularly in the stock market. In this video, I'll discuss what, in the past, gave Michael Burry such conviction about the impending financial disaster. What leads him to feel that a more significant one is approaching that will affect an entire generation, and how can you protect yourself and your family from taking any risks that may cost you money? The Great Recession, often known as the 2008 financial crisis, is nothing new to us. The experience made it clear that nothing can ever be perfect and that we should constantly be ready for the worst. Robert Kiyosaki, an American investor, is quoted as saying that while a financial crisis can be a terrible moment for regular people, it can also be a terrific time for professional investors. On the plus side, this sentence is indeed accurate. The COVID-19 epidemic is a current example. Some people made a lot of money, while others lost a lot. A typical example is Elon Musk, who eventually surpassed Jeff Bezos, the billionaire founder of Amazon, to become the wealthiest person on Earth. Burry, born in 1972, started at Stanford Hospital as a pathologist and then as a neurology resident. He later changed careers to manage hedge funds and started specializing in investments in troubled businesses with high potential for value growth. Burry saw personally how the 2001 terrorist attacks and the 2000 dot-com bubble crash caused economic harm to the United States, which was already experiencing a modest recession. Burry recently asserted that the stock market, cryptocurrency market, and other asset markets would likely undergo a massive meltdown. How quickly this will occur is the real question, though. Do you firmly trust Burry's audacious assertions? Post your response in the comments area. Burry has already made assertions of this magnitude. He has foreseen a comparable circumstance in the past, which occurred. However, I'm sure neither you nor I would want this to occur. Burry shut down his website, where he had always given investing advice, because we are all aware of the potential repercussions of the year 2000. He then established Scion Capital, his hedge fund, and within 4 years, he had amassed a whopping $500 million in assets under management. It got to the point where he had to turn away prospective clients' money, forcing him to concentrate more on the investment deals he had with his existing clientele. Starting your own business is challenging for many people. Do you want to learn how to launch a business that has always been your dream? Remember to subscribe. You can follow along with me as I walk you through the steps. Burry spent a lot of time studying to get to that point since he was passionate about starting his financial firm. Most of his studies enabled him to choose wisely among his investment options and drew more people to join him in his venture. Burry was able to foresee danger because of his high level of intelligence. This caused him to permanently alter his investing strategy when something similar was likely to occur. Due to Burry's analysis, which suggested subprime mortgages and related bonds were likely to lose value, some of his clients withdrew their investment money in protest of his choice to short the market. They didn't have the foresight, thus, it wasn't their fault. However, he had ultimately greatly benefited from his prognosis, as had the investors who put their faith in him. This demonstrates that accepting a risk that other people don't believe in might be a turning point for you at some point in your life. Burry has now gained international recognition as a result of his prophecies. On his social media sites, he has a large following of people eager to follow his posts. Michael Burry is a fantastic illustration of the value of due diligence and investigation. Before making his disastrous investment, he diligently studied the subprime mortgage industry for months. This thorough preparation and analysis ultimately paid off handsomely. In September, Burry removed a tweet on the cryptocurrency market. "The market and my back crashed. I ought not to remove you. On top of that, you can reconsider your decisions to avoid suffering any loss. You might believe that the economy isn't going any worse to trigger a deeper recession if any of these reach a worse level, but given the range of possible outcomes, you could be mistaken. You must use prudence in light of the S&P 500 index's sharp decline. Investing in businesses that are less susceptible to the effects of a market downturn is one way to stay safe. Portfolio diversification is a further measure of safety. This entails investing in various asset types, including cash, bonds, and property. You can reduce your risk and guard against losses by diversifying your portfolio. For example, many people believed that the 2008 stock market collapse signaled the end of. However, as everyone now realizes, that wasn't even close to being the case. Please give our Money Facts channel a like, subscribe, and turn on the bell notification before we continue to improve your money management so you can live the life you want. The market has more remarkable booms and busts in store for us in the future than the Great Recession, which was merely a blip on its radar. From its peak of $70,000 in November 2021 to as low as $20,000, the price of Bitcoin has decreased by 66%. The ball is in your court to be highly cautious with whatever investment you enter into as of October 2022, making Burry's prediction of a worsening fall appear very likely. Therefore, spread your risk and continue to diversify. High levels of debt, inflated asset prices, and investor complacency are just a few of the elements cited by Burry as being the precursors to another significant market drop. He warned that the upcoming crash might occur sooner than anticipated and suggested that people start getting ready for it. Burry now compares the current circumstances. We are associated with December 2007. And according to his analysis, things are a mess. Burry compared the current economic downturn to a crowded theater with a tiny exit. And as investors scramble to exit the market, they either stomp on others or crush them as they do so. Other nations are pursuing a range of steps to stop the dollar's appreciation versus their currencies. Some people are engaging in the foreign exchange market to acquire their currency and sell dollars. Some nations are increasing interest rates to make their currencies more appealing to investors, while others are letting their currencies float more freely. The pound hit a historic low of $1.15 against the US dollar. Such an incident last occurred on February 25, 1985. Greg Jensen, the co-chief investor of Bridgewater Associates, supports Burry's assertion regarding the impending Great Catastrophe. In Jensen's opinion, we cannot return to the pricing level that prevailed before the COVID-19 outbreak. Many still believe we have yet to reach the bottom despite the current decline and enormous crash. How credible is that? If we continue to experience a more catastrophic crash than what has already occurred, we will undoubtedly experience a more severe catastrophe than the Great Depression. A perfect storm of circumstances, including the recovery from COVID-19 high inflation rates, the Terra Luna crash, the Russian-Ukraine war, and supply chain concerns, led to the cryptocurrency crash, which saw a significant decline in price starting in May. These all contributed to a decline in interest in cryptocurrencies and a corresponding drop in their price. The fact that many people had substantially invested in cryptocurrencies in the expectation of making a quick profit and then sold off their holdings as the prices started to fall contributed to the aggravation of the crisis. What precisely does this market crisis mean after all is said and done? The sudden and abrupt decrease in asset prices is known as a market crash. It can significantly affect the economy and is frequently linked to a period of panic selling. Although a market crash can happen in any asset market, it is most frequently linked to the stock market. An abrupt, unexpected event that makes investors lose faith in the future often starts a market crash. Possibilities for investors to try to cash out before prices drop. This can result in a quick and dramatic sell-off of assets. Additional market disasters may knock on the economy by shattering investor faith in the financial system, reducing consumer and company expenditures, and even resulting in business closures and job losses. Conversely, when a bubble bursts, the asset's price typically falls dramatically, resulting in broad-scale economic instability. Usually, when a financial bubble pops, investors suffer the most. This is because they frequently invested sizable sums of money in depreciating assets. However, since the economic downturn that follows the burst of the financial bubble can result in job losses, non-investors may also be impacted. A lengthy short film that concludes with the perplexing statement that Michael Burry is only interested in one item, namely water, results in wage reductions and a reduction in overall spending. It would help if you gave this sentence some thought. Knowing Michael Burry's activities and how you might use his trading strategies is eye-opening. You could object that it's impossible to invest in water, especially given how frequently commodities like oil and gold are traded on the futures market. So, don't be shocked by this. The trade market for water has only recently opened up as well. You can be among the numerous people unaware of the latest development if you don't take quick action. Benjamin Franklin, a founding father of the United States, once remarked, "When the well is dry, we appreciate the value of water." It is essential to heed Burry's cautions. Unfortunately, his forecasts regarding the housing market crisis were accurate. Now that he has a track record of being right about significant market movements, he is warning that the following crash will be far worse. Investors need to be ready for this financial disaster. I'm done for today, guys. Do you have any insight on the subject? Please feel free to share your ideas in the section below. Don't forget to click the like and subscribe buttons to receive more incredible videos like this one. Thanks for watching. Have a great day.